If you're looking to be perfect, being an entrepreneur is not the right job for you, because you will make mistakes, you will be wrong, and what you learn from it, how quickly you react and are humbled by it, I think will define you.
What are some of the other significant challenges you faced in scaling your initial operations?
Just own your mistakes, take care of your customers at all costs. Don't worry about going public on the first 5 or 10 customers. You won't, but you won't get to 25 or 50 or 100 customers if you don't take care of the first 10.
Welcome to the Future of Work podcast, a series where we discuss trends and insights shaping the modern workplace. I'm your host, Callie Zeifang. Today we're joined by tech veteran Mike Duffield. Mike is the co-founder of Alchemy, a company that helps higher education institutions maximize their Workday investment. He's also currently VP of Go-to-Market at Ridgeline, a company providing a cloud-based investment management platform. Drawing on his extensive experience in scaling companies, we'll explore key principles for fostering strong company culture during growth and strategies for high-performing teams. Let's start by talking about your background as an entrepreneur and small business leader. Can you tell our audience a little bit about your experience?
Sure. I think being an entrepreneur goes all the way back to being a kid. I was a caddy at a golf course, so a lot of scrambling and a lot of making sure that you were attentive to the golfers if you were going to make any money. That led to being a paper boy, morning paper boy, so that was exciting. I sold fireworks illegally in the middle school, 8th grade, made a lot of money. But that was an excellent entrepreneurial experience, buying wholesale and selling retail to a very interesting
demand market.
They loved bottle rockets and a lot of the fireworks. All a precursor. I left college and I was able to join in a very exciting company. It was called PeopleSoft. They were at the tail end of being a private company on a journey to being a public company. So it was just right in the stretch of road shows, and they had achieved some early initial success and just got to be associated with a lot of really smart people. That journey lasted about 10, 12 years. Oracle hostily took over PeopleSoft, as most of us know. That was the genesis of Workday. And it came on as Workday's initial global leader of sales. Being an entrepreneur, you have to really dig in. You have to be willing to be wrong. You have to put yourself out there. You have to act without all the answers. I kind of liken it to we're all taking off in an airplane, but it has no landing gear. And you're going to build a landing gear along the way, but it isn't there yet. So there's a little bit of vision and hope and aspirations that you're getting to. But getting your first 200 customers, it's about putting yourself into a place where you can articulate this great vision, but you can't do it alone. You have to be surrounded by very talented people that, have a track record, have a reputation, have a motivation, a tenacity, a passion for delivering all of these new things, into the market.
I like to think of it, be fast to fail in a way. I love that kind of slogan, and never a failure, but mistakes is what you learn from.
Oh, no, for sure. You learn from your failures more acutely than you do your successes. Yeah. And you got to be willing to make mistakes too. If you're looking to be perfect, being an entrepreneur is not the right job for you. Because you will make mistakes, you will be wrong, and what you learn from it, how quickly you react and are humbled by it, I think will define you.
Mike, you've had a fascinating journey. What are some things that we can take away from it?
One, your customers are your best salespeople. Salespeople are marginally believable. But what your customers will attest to will accelerate any of your potential sales that much more quickly. Yeah. Another, I would think, one that my father instilled in me is 2 ears, 1 mouth. Use them proportionately.
What does that even mean?
It means be an active listener.
Okay.
And in that same vein, it's more important what people hear than what you say. And so understand what your audience is, be empathetic, understand in that regard. But you've got to balance the what you need now with where you're going to be 12 to 18 months from now. And so the things that you're doing, the people that you're recruiting, you're looking for their contributions in the short term, but you're also trying to balance what they look like, when you've doubled in size, what you triple in size, and what are some of the processes, what are some of the things that you're going to be needing to do to service, 10 customers at once versus just one at a time, or 30 customers at once versus 10 at a time, and so on and so forth. So you want to balance the living and the needing and the acting in the now versus where you're going to be 12 to 18 months from now. And so those are the two, I think, things that I've had to learn a little bit along the way, but those will be helpful because I don't think you're going to get to be a successful company unless you're selling what you're building or exactly. So you do need some sales excellence, and then over time you do need the right leaders to be able to live in the now and to balance that with the future.
Amazing. Thinking back to the growth stages of companies like Alchemy and Ridgeline, what's one key principle or strategy you applied that businesses of any size could use to foster a strong sense of culture and keep employees aligned as they scale?
Sure. So I just think the biggest philosophy is your velocity and your growth has to trump or be greater than trying to be perfect. And so don't try to be perfect. Act with a good sense of what you want to do, and don't try to make, the obvious mistakes, but be willing to make mistakes and push yourself out into the unknown. So velocity is greater than perfection. So that's one aspect of it. The other thing I would say, and it goes without say with what you're doing, is overinvest in your first wave customers. That might be 5, it might be 10, but your first wave customers, you're gonna learn a lot. And so you have to have a loss leader mentality. You have to have a mentality of I'm going to do whatever it takes to make those folks successful, regardless of the economic impact. And so don't let nickels get in the way of dollars. And so those first 10 customers are going to lead the way to your 25 that follow it. Those 25 are going to lead the way to 50 to 100. Your 100 are going to lead to 500, and off you go. But you won't get anywhere unless you get the first 10 live and get the first 10 successful. So you got to assume that whatever you're doing for them, you'll have some pattern recognition. You'll have a learning curve, tribal knowledge. You'll be able to codify it, scale it, measure it, and then train, certify, the next wave people that are coming on board. But don't try to be overly super perfect for the first 10 in the way you're proposing it or the way that you're pricing it. Just throw all the effort at getting those first 10 live and know that, you'll make some mistakes. If you make them, own it. Don't have your customers pay for your early mistakes. Really move in and be accountable, be transparent, high integrity, and just, like I said, your first 10 customers are the most important you can ever think about.
Customers are our best sellers, right?
Without a doubt. Without a doubt.
We spoke about culture. Now we're going to switch gears a little bit. What are some of the other significant challenges you faced in scaling your initial operations?
Okay. So, yeah, I'll zero in on Alchemy. Alchemy was a service provider. I started Alchemy. I left Workday after, a dozen years. And Alchemy is a system integrator, a consulting service partner, focused exclusively on Workday, but servicing higher education clients. So we would implement HR, payroll, finance, also student administration to both the administrative and academic sides of institutions. So these projects would last 2-3 years, very complex, a lot of people, et cetera, et cetera. So, we started Alchemy, and I'm going to encapsulate the advice and don't try to grow too fast too soon. There was a lot of demand for implementing student systems, when we started Alchemy, and we jumped into it. No one had done it. So no one had gone live with it. Typically, Workday would take the first 10, 20 live and then create a script for everyone to follow, and then everyone would scale up on that script. But the script wasn't written. That was one of the reasons we started Alchemy. And so we were defining it as we went. And it was a challenge. I mean, it was a new product. There were new releases every week. It broke. No one had gone live. There was no pattern. There was no training. There was no cert. So it was just, get out and do it. And so we grew, and there was a lot of demand, and then COVID hit. And when you're building a company, you are balancing your funding, you're balancing your investor community, whom you're hiring, your overall equity pool, your overall compensation, but most importantly, your cash, your money that you've got to, pay people. And a painful lesson we experienced is we grew too fast too soon. And while a force majeure event like COVID you can't predict, it certainly hit us pretty hard. We had to lay off about 30% of the workforce, within a 2-week period. We had to put a number of our projects on hold because the higher education institutions, the world shut down. And so we just weren't prepared for that. So the bench that we kept, we had to pay, and we weren't getting incoming revenue, and we quickly were running out of money. And so the advice, while you can't predict COVID or, another force majeure event, is just not to get over your skis a little bit on your cash burn. And so when that happens, you have to raise more money if you're able to, but you do it at I would say a punitive valuation. So think about it. If you have 10 shares and your company is worth $10, each share is worth a dollar. And if you have to re-raise another dollar, then each of those initial 10 shares might now only be worth 50 cents.
Yep.
And so you dilute yourself, you dilute your initial investors, you dilute your employees by getting out ahead of yourself and spending too much money too fast, which goes back to growing too fast too soon, which is counterintuitive actually to an entrepreneur. And you want to grow your top line as soon as you can. You want to show year-over-year growth, quarter-over-quarter growth, sequential growth. You want to show everyone that you were right. But you have to do it cautiously so that you don't overextend yourself and erode the wealth-creating moment. That you're invariably being the entrepreneur in the first place for. And so I think, one side tangent to that is, I would say, other advice for, aspiring entrepreneurs out there that are going to launch their own business. Do it with your own money. Put a little bit of your own money. Maybe you can't finance the whole venture, but don't just be the founder CEO and let other people invest in you, because the investors will eventually carry the biggest return on the back of your hard work.
Money where your mouth is.
A little bit. It's not a pride thing. It's more of, you're going to work your ass off, for a decade, or they always say it's an overnight success, but it's amazing. It took 10 years to be an overnight success. So, but you're going to really work hard at a big impact to you and your personal being and your family and whatnot. Just put a little bit of money of yours up front, so it exponentiates on your success, not just, an angel financer or, a PE firm or what have you. So I know that's a tangent, but I would put that into the same vein of lessons learned and things that I would advise others. So don't grow too fast. Don't burn your cash down too quickly. You'll dilute yourself. And then, as I mentioned maybe earlier in the podcast, just own your mistakes. Take care of your customers at all costs. Don't worry about going public on the first 5 or 10 customers. You won't, but you won't get to 25 or 50 or 100 customers if you don't take care of the first 10.
100%. Building on that, you did say don't grow too fast. But when you
don't grow too fast too soon.
Okay.
You want to grow fast.
But when you are growing, how do you approach building and empowering teams in a growing environment?
Sure. So there's different phases of growth. What I was talking about from 0 to 10, 10 to 25, 25 and above, just think of it as stair steps, taking different steps up the stairs. Eventually, you want the up and to the right and the hockey stick and the leverage that you're going to get. So advice, find people that are as passionate, as motivated as you are. But make sure that they're also comfortable with ambiguity. You don't have the answer key. You're not just handing them a script and say, follow it. You're also progressively discovering, what is going to be efficient and highly successful in what you're trying to do. And so you need people that are creative, that are humble, that are willing to be coached, that can adapt. And there are different types of folks that are capable of doing that. The other thing I would say is share the upside. You don't want some pyramid scheme where you're the only one making money. If you're going to do this and it's a risk for folks to leave the comfort of whatever they're doing to join your entrepreneur venture, share, be generous. So when we set up our cap table, we were very generous to our operating and leadership teams, to our first 100 employees, and we really had a goal in mind, a third to the initial investors, a third to the initial founding and leadership team, and then a reserve as you begin to scale and grow the company so that you could attract other leaders, and provide some upside to be generous. The other thing I'd say, be extremely honest. Typically, when you're launching a company, you are assembling a team that's maybe never done it before. Maybe they are a super sales person somewhere that has this amazing upside, but she's never led a field organization. And, you have to be honest with her, or maybe your chief operating officer was someone who was great in some aspect of their prior role, but they've never been a COO, of a starting company. So you have to be honest with each other. You will work hard. You will make mistakes. You will be imperfect. You will be under stress. You're not your best when you're stressed. And you have to be accepting of people's faults and be just transparent and honest and have a good lens of communication. I think high-performing people will accept the fact that they're imperfect. And then you're also, like I mentioned, dealing with a cone of uncertainty as you're endeavoring to do this new thing, regardless of what business you're trying to launch. So that's how I would encapsulate it. It's just, surround yourself with equally motivated, passionate people, be super honest with them, and then be generous and share the upside of what you're trying to do with everybody.
Amazing. Well, to wrap us up today, what's one key lesson you've learned about building a sustainable business model that often gets overlooked? And what advice would you give to other businesses to ensure they prioritize that element?
There's two aspects of this. I touched on a few things earlier in our discussion. Velocity trumps perfection. So there's that. You've got to push yourself out there, have a culture of acceptance for crazy ideas. You've got to attract people that are comfortable with being uncomfortable, comfortable with the unknown. And I'll give you an alchemy example. As I mentioned, we were up on the plane. We didn't have any landing gear. But we had people that wanted to come in and try to extract the exact gross profit margin off of our implementation plans. And I thought it was impossible. You don't have a landing gear. So how can you even have a procedure for putting the landing gear down and then hire and train a professional staff that can execute that procedure and then measure it so that it can be delivered at such a way that you can have junior and senior workforces bill it at a particular rate, sell it at a different rate so that you can extract out the profit margin. It's impossible. So let's land 10 planes. Let's look backwards and learn from all of that, then put together a plan so the next 20 planes that we're going to land, metaphorically, we're going to incrementally get better. And then at some point, we'll put a stake in the ground and say, this is the way we should land planes. And this is how we can make a lot of money doing it. And then scale the hell out of it. And so, do the things first, then try to be perfect at it. So that's number one. The second thing I would say, and it's more philosophical, is understand what your partners and what your customers want from the relationship. Maybe it's to do things faster. Maybe it's to look better in front of their customers. But you have to acutely understand what your customers expect to get from what you're delivering or what you're selling in order to do it well, in order to scale it. If you're always worried about what your bottom line is or what you're doing all the time, or you're only looking in the mirror, you'll just hit a wall. But if you can be in tune and be empathetic and understand intuitively what your customers are seeking from either your product or the relationship or your people, that'll stand the test of time. And so, and the last thing I mentioned is just surround yourself with people that are equally passionate and motivated. Malcolm Gladwell has a concept of, 10,000 hours. And, until you spend 10,000 hours doing something, you're really not an expert.
Yep.
But once you've gotten past 10,000 hours, you really are an expert. Yeah. And so, do something that you're an expert at. And that correlates with your true skill sets. I'm a math guy, so I like math and try to combine those things and understand who you are and be true to yourself and try to enjoy it along the way. Because it's a lot of work, and if you're not enjoying it, that would be painful.
Yeah, that would be a shame. I greatly appreciate your time, and thank you again for being here.
Yeah, sure, right on.
That wraps up another episode of the Future of Work podcast. A big thank you again to Mike Duffield for sharing his expertise. If you enjoyed our talk, be sure to check out other episodes at workday.com/podcasts. We hope you join us again next time as we continue to explore the future of work together.